We are going to do something we've never done before on Wealth Talks. We're going to go to Reddit and we're going to read what people are saying about infinite banking. And we're going to address that right here today on the show.
I'm interested to hear what people are saying about the infinite banking concept on Reddit.
It's going to be interesting for sure. Let's get started. I'm going to search infinite banking here on Reddit. And the first thing that comes up here is it says that there's a thread for infinite banking. There's also threads for personal finance, life insurance. There's different questions on these different threads. The first one that's coming up is on the personal finance thread. It says, Dad wants to dive headfirst into a concept called infinite banking. It smells like a scam, but I can't find any reliable sources. My dad has always been a little bit, well, let's just say an alternative anything. I've grown concerned for his finances. My parents have always worried about money, and I'm starting to hear about how he's paying thousands a year to get investment advice from alleged financial pundits. Another scam for another time. Traditionally, his investments revolved around buying a bunch of gold as US dollar crashes just around the corner. His favorite new book is The Death of Money. I never really go too concerned, as at least he's not entirely throwing money away with gold, even if it isn't a way to make money. However, this new thing he's talking about is something called Be Your Own Banker, or infinite banking. I know very little about it, other than it sounds like a giant scam. It's your money, you can't lose, you're your own banker, don't use the banks. The concept seems to revolve around having whole life insurance policy and paying into it and borrowing from it for finances. The catch is you pay a lot of premiums and insurance salesmen get rich off of it. The problem is I can't find any actual reliable sources. It's all just dueling WordPress blogs. Some for it, some against it. For anyone intimately familiar with this, is there any credible sources out there that can shed light on how this works?
That's a lot to unpack. He has given a lot of information.
And that's the thing about some of these Reddit questions. You can go long format on Reddit.
So we've addressed is IBC a scam? We've written about that. And it's important for people to understand that you don't borrow your own money. You don't even borrow from your life insurance. You borrow against it. So when people think about banking, then they think about infinite banking, and they have some missing cogs in the wheel when they make that transition. A bank never loans its own money. And so if you're going to be practicing infinite banking, you're not going to borrow your own money. You're not going to use your own money. You're going to use somebody else's money. And so now we've just got to figure out, is it more advantageous to use somebody else's money, or is it more advantageous to use your own money without the infinite banking?
One of the things that I think people think that they're using their own money is because they paid into this. So the loan that we're getting, the policy loan that we take from the insurance company, even if it is somebody else's money, the cash value in our life insurance is the collateral for it. So is it kind of like borrowing your own money, or what's the difference?
Well, it would be no different than saying taking a loan against your 401k, except that in the infinite banking concept, when you borrow against your life insurance and you repay it, you recredit your line. You recredit that. And so, and behind the scenes, the policy is still growing at its guaranteed rate and with any dividends that are shared with you. Whereas if you borrow from your 401k, you have to repay it in a certain time frame, and the interest that you pay, you really are borrowing your own money, and you're just paying yourself back interest.
One of the concerns I'm noticing here is the son is saying, oh, Dad has done this thing. He's done this thing. He's done this thing.
This is just the next thing.
Yeah, this is the next thing. And
he's definitely on alert because of that pattern.
Right. And although becoming your own banker, the infinite banking concept, is a valid thing, it can be used as a scam.
It's often promoted like that because maybe the agents don't fully understand it and they see it more as a sales system rather than a process, a way of thinking.
Absolutely. And then you have like his father. I'm not saying his father is definitely this way, but sometimes we have clients that come to us, or prospective clients, and they're excited about the infinite banking concept because they have heard certain things on the internet, and they're almost approaching it even as if it's this scam that is going to make them the next million. And we have to talk them down
Yes.
and bring reality, bring the truth about the infinite banking concept. And some people purchase policies and get started with it and use it appropriately with the right mindset. Other people still have this idea that, ooh, wow, it's going to be magic and do great things for me. So their experiences are different because one is coming from an understanding of truth and one is coming with some false ideas of what
Yes.
it's going to do.
So it really is the attitude that they're bringing into it. They're going to either find the results that they were looking for, the somebody who's coming to it with a balanced approach, they're going to be happy with it, or they're going to come at it from the mindset that it's going to be magic somehow, and they're going to be disappointed.
So if I was talking to this Reddit poster, I would tell him, look, Mr. Nash, who wrote the book, Becoming Your Own Banker, the Infinite Banking Concept, said right off the bat that the infinite banking concept was not a sales tool for life insurance. It was not a sales process. Infinite banking can be done without a life insurance policy. It's a way of reorganizing your finances so that you recover the cost of things you purchase and the interest that normally would go to somebody else. And that's because we finance everything in life. We either finance a purchase because we give up the interest we could have earned on our money when we use our own cash, or we use someone else's money and we end up paying them the principal and the interest for the use of their money. The infinite banking concept allows us to recapture the principal and use it again, and also allows us to continue to earn interest on the money that we paid for the life insurance policy. So there's no catch here if you really understand the terms and what's happening. It's just that there's been a lot of people using this as a sales tool that have put out some misinformation, and it's caused people to raise a red flag, and they should until they understand it.
Yeah, something nice about the internet is you can find good questions to ask. Doesn't mean that everything that you find on the internet is going to be accurate, but asking the right questions can help to get to the real truth underlying the facts. Something I notice about this question is that this guy is paying a lot to advisors already, the dad, here in this question. And the son feels some concern about this, that they're concerned one of the previous investments was the US dollar crashes just around the corner. So he's coming at this from a doomsday mentality. That is a question we often get. What happens to infinite banking if the US dollar goes kaput? What does that look like?
We don't know. Nobody knows.
Yeah.
We don't. There's no way that we know. But we do know that the US dollar has changed 3 or 4 times in the history of the United States, and we haven't collapsed financially completely. We've had a couple of depressions and some recessions, but we've always managed to come back. And that is because people still have to do commerce. They have to be out exchanging things because none of us can be self-sufficient. We have to interact with other people, and to interact with other people, there's got to be some type of an exchange going on. But nobody knows what's going to happen in the future if the US dollar changes. We don't know how that's going to affect the life insurance policies, but the principles in infinite banking will work regardless of whether you have life insurance or not, because it has to do with recovering the cost of what I pay for something.
When you say the US dollar has changed 3 or 4 times in the history of the United States, are you referring to like we started out with the Continentals in the
Yes.
Revolutionary War, and then we finally got the US dollar, and then even though it's been called the US dollar since then, it's gone through different changes, like different backing with silver certificates or gold.
Yes.
Those are the types of changes. Okay. So maybe, we could even potentially have a currency that's based on crypto in the future that's still called US dollar. We don't know. But those types of changes are what you're referring to?
Yes, and unless people are really just stupid that are leading this change, they're going to honor contracts that are already there.
You have to, or you have economic collapse.
I always tell people, until contractual law is void and null in the United States, I'm not really concerned about what's going to happen to my cash values of my life insurance policy.
And if contractual law disappears in the United States, we've got way more problems than just the cash values in our life insurance or the cash values in our bank accounts or property values. all kinds of problems. There's one other thing that's in this question, and that is the idea that life insurance agents are going to get rich off selling premiums.
Yes, I noticed that in there.
And one of the things I think about is Zig Ziglar, who was a motivational speaker, did a lot of talking to salesmen to help them do better in their life. And one of the things he talked about is that when I sell you something, I get an immediate reward because I earn commission on that sales. But you, as the person who bought that, should receive benefit far longer than I receive benefit. I get an immediate benefit, but like when we're talking about whole life insurance, that's to last your whole life. You're getting a benefit for your entire life. Think of a washing machine salesman. They get a commission right away, but you get to wash your clothes for how long? As long as that machine goes. And so that's why we can have these exchanges, and the salesman should get a benefit, but the benefit should last the consumer much longer. And so if a policy is well designed and the client has some good understanding, then they're going to get far more benefit out of that policy than the salesperson.
The life insurance agent, when they sell a policy, the commission does not come out of the premium the policyholder pays. It comes from the investments that the insurance company makes with those premiums.
Okay.
So from the profits that the insurance company is making from all the accumulated premiums they collect, they invest it, and now our commissions are coming out of that fund.
So those costs have to be worked into the life insurance products.
Sure they are.
The values eventually, but they are amortized in, so that you do have that upfront cost for starting any new policy, but it's not coming directly out of your pocket.
That's correct.
All right. There's got to be another question.
Oh, yes.
Another comment.
There are probably thousands of questions on Reddit. I haven't gone that deep into it, but let's look at this one here. Advice on policy for 20-year-old uses an infinite bank. Considering purchasing a policy on my son. He's a healthy 20-year-old. This is my vision. In lieu of being able to leave him as much of an inheritance, I understand he could make withdrawals or take loans against the cash value to be used for things like a down payment on a house, his future kids' college tuition, things like that. Initially, I could be the beneficiary, but once he gets married, that could be changed to his wife. I intend to make the payments until I'm no longer able to, and then he can take them over. I've discussed this with him, and he is interested. Can anyone offer me advice on a product that could serve this purpose, or recommend a different plan? And of course, you have a lot of people jumping in to offer advice.
Well, let's just jump in on that. Yes, he could do that. What a great gift for his son.
Yeah.
And yes, he could be the beneficiary. As long as the 20-year-old is still financially dependent on him, then he could own that policy. If the 20-year-old is completely financially independent, then the underwriters would prefer that he is the payer of the policy and the son own the policy. And of course, an owner names the beneficiary.
So what if he's dependent right now, and then 3 years down the road he's not anymore? Does the parent go ahead and keep the policy, or do they have to transfer the ownership at that point?
No, he will be the owner to start, and he will be the owner until he changes the ownership over to his son.
Okay.
So he could keep it for his entire life if he wanted. But it sounds like he wants to eventually give that ownership over to his son and allow him to use it.
He wants this to be the inheritance.
Yeah, that's fantastic.
Here's another one on the personal finance thread. It says, does anyone here have experience with infinite banking? I just heard about it on a podcast.
I do.
And they tend to trust the guy. I'm skimming a little bit here. Essentially, the concept is that you get a whole life insurance policy and then borrow against it to make cash purchases. The value of the plan continues to build like the equity in a home would, even if you take out a mortgage against it. So effectively, you're becoming your own lending institution and borrow money from yourself rather than paying interest on loans. It sounds like a neat concept and a clever way to make idle money work a bit, but I was curious if anyone on here has had experience actually doing it.
That fellow seems to really have understood and got some good education about how infinite banking works.
Yes.
Because he said, number one, you put money into the policy and it builds equity or cash value, and then you borrow against it. Mm-hmm. And that's exactly right. You're never borrowing your own money. You're borrowing against the part of the insurance that's completely paid for. He even relates it to a mortgage that you have equity in it. And that's exactly right. You can borrow against the equity you have in a house or a piece of real estate. The infinite banking concept is really no different than a lot of real estate investing goes. You buy a piece of property and you can leverage that property once it's cash flowing for you. And you can go and you can buy another piece of property with the money that you leveraged against the first one. Only in life insurance, you have guarantees. In real estate, you don't. The market could crash. There's higher risk with real estate, but it's the same basic concept. The other thing is that in real estate, you're often leveraging that first piece of property at a bank or through a joint venture or from a lending institute, and the interest and principal you're going to pay is going to be lost. In the infinite banking concept, because you're borrowing against your own equity, when you pay it back, it restores your line of credit so you can leverage that money again.
So if this guy had written an email to me or called on the phone, and he's demonstrating already this level of understanding, I would say, hey, do you want to schedule a web meeting so you can look at how one of these policies is designed so you can see the guaranteed values and ask questions so that you understand. I think that would be really helpful for him.
Yeah, that's a nice way to learn, because once you're to this point, you have the conceptual knowledge. Now you need to see the numbers to see if is it going to make sense in your situation. Something I noticed about this here, it sounds like a neat concept and a clever way to make idle money work a bit. That's a big benefit of the infinite banking concept. What is your money doing for you in any other financial paradigm where it's sitting around waiting for the next thing that you're saving up for?
Waiting for retirement, waiting for 30 years.
Right. Well, what is it doing for you? Some people have that money invested, but then they have to be willing to ride the ups and downs of that investment. You need a certain amount of savings that's not fluctuating with the market that much. And so where are you going to put that? Putting it in life insurance is a great place. Over a long period of time, it has been a great place. And right now, a lot of people are putting their short-term savings in high-yield savings or in short-term bonds. Interest rates are fairly good on those things right now, but it hasn't always been that way. Those things are only good short-term, because we just came out of a period of very low interest rates, and those things have not been a great place to keep money for several years. So starting life insurance, where you get that return over a long period of time, that is definitely a way to make idle money that's just sitting around be growing for you and working a little bit more.
And that's because of the guarantees in the whole life insurance policy. I was just reviewing 401k balances from 2020 to 2025. And in 2021, the average 401k balance in America was $142,000. Then it dropped 20%, and it stayed that way until 2024 when it finally went up. And the article said it went up 20%, but it's the average balance at the end of 2024 was only 132. So we still haven't got back to the average balance of what was 2021. Whereas my life insurance policies have gotten bigger every year. I don't go back and forth, like you said, with the market. Everything I gain is mine, and it stays there forever.
So you had to go through a phase, though, to start those policies where it wasn't that way, where the money that you put in premiums, where there wasn't quite that much available in the first year, the second year, the third year. Now it's there. So how do you overcome that phase of the process?
So this takes us back to what Nelson Nash, the founder of the infinite banking concept, talked about. He said that Ed Deming, the business guru, went to Japan after World War II and helped them get their market back up. And he said, look, folks, you need to really think about putting money into a business for the first 7 or 10 years before you ever take any profits out of it. And that's what caused Japan's market just to go on fire there right after World War II for a long time. Americans, they want everything tomorrow or yesterday. They're not willing to take the discipline to build the foundation. But when we are thinking about starting infinite banking, we have to capitalize it. We have to fund it. And this goes
Kind
back.
of like starting a new business.
Yes, and it's like starting a bank. To start a bank, it takes millions of dollars. People have to get together and put, 40, 50, 60 million dollars, and they have to stuff it away where they can't touch it. And it earns just a nominal interest rate so that they can get appointed as a bank. So that's kind of what we're doing when we're starting a policy. Only it's not going to take $40 or $60 million. It's going to take whatever we can set aside. And then as we manage that, it will be like Jesus said, whatever you are faithful over a little bit, you'll be given more. And that's the process of how the infinite banking concept works.
Let's look at one more today. Let's see here. Looks like this one's from just 6 days ago. Let's take a look at this one. It says, how does one leverage infinite banking in today's economic climate? Most of the examples where I've seen where IBC helped people become wealthy in the past is real estate. But this was when borrowing was really cheap. Today, if we borrow against our life insurance cash value, we would experience a negative internal rate of return. Basically, in the current environment, it would make sense to use IBC only if the net return of your investment after borrowing against your cash value gives at least 3 to 4%. What kind of non-shady investment opportunities like that are available?
I think the essence to this question is failing to realize what Nelson Nash talked about the infinite banking concept was all about. And that is to recover the cost of purchase, to recover the cost of finance. And so if I get all the money back I made in an investment, plus I get the return on the investment, plus I get the return, the nominal return the policy's given me, I'm going to be better off borrowing from my policy than I am just taking cash and making an investment. Because now my cash, once it's made that investment, gets no return on it at all except what's happening in the investment. And so that's the huge difference. I was just sharing this with someone yesterday. They borrowed $200,000 from their policy, or they borrowed $200,000 from their savings account. As soon as they took the savings out, boom, there's no more growth on that money. They spent the money on the same thing, and then they repaid that as if it was a loan. So you have to build that $200,000 back up in your saving. Whatever compound interest you're going to get, it's going to take time for that to happen to get back up to $200,000. In the life insurance policy, it happens quicker, and you recover the money that you had because the policy keeps growing. In the end, the one that did this, the policy loan instead of the savings loans was up $70,000 over what the other person did.
I feel like there's a deeper level on this question too, where he's talking about the negative internal rate of return. And it's making me think of people that contact us. They want to do infinite banking for real estate. They want to put in a big chunk of money and then borrow everything out, and they're going to have it invested in real estate for many years. That situation, that's going to create a negative internal rate of return for the policy, because you just started this policy. Maybe you're going to see a 3 to 4% internal rate of return over time, and you're taking a policy loan at 5 or 6%. That's a negative internal rate of return situation, because you're going to have that loan outstanding long term. Where the balance comes in is, let's say that you have a lump sum that you're going to invest in real estate. You start a smaller policy. You're going to get that money into life insurance over time as your reservoir, but you're realizing, like Ed Deming, that it's going to take time to develop. So you start paying the premium with part of your money, but then you invest the cash that you have in your real estate, and you start letting that cash flow help feed it. So now you're building your life insurance over time. Let's say you do take a few policy loans to help invest in the real estate over time. But then because they're smaller loans, you're getting them paid back relatively more quickly. So now you have 5 to 6% policy loans outstanding for a few years at a time, but you're getting the 3 to 4% growth in the policy over a long period of time. That shouldn't be a negative internal rate of return. So it's about how you balance the picture. Some people, insurance agents that these people are coming to wanting to dump a whole bunch of money into infinite banking policy so that they can borrow it all out for real estate. Some of them would gladly sell a policy like that because they can earn a nice commission and walk away from it. But the value is going to be in a more balanced design for this person based on the strategy that they're trying to implement.
That's one way you could get a negative return. And the other way is that people that sell life insurance misleadingly say, well, the dividend is 5% and the interest rate is 4%, so you're going to make a 1% return, and that's a falsehood.
That is a falsehood, yes.
And, and so now in this environment when interest rates are 5% on the market and the dividend is still just 5%, it's a wash, or maybe the interest rate's higher than that. But that's a misunderstanding to begin with. That's not the way the life insurance policy works, and dividends are not guaranteed. So we have to look at the whole process and understand it. Otherwise, we're going to be misled and have a question like this as well.
One of the things he said is that he could see how in the past under other financial circumstances, how this would all work. But as Nelson Nash pointed out, imagination is more important than knowledge. And so when we use our imagination with the financial situation we're currently in, that's where the gold is, because then we get to take these financial principles and apply it to where we are now and into the future. That's what we need to be doing, not lamenting about, oh, this would have worked in the past.
Yes. I think that's true. That imagination is more important than knowledge, as long as that imagination is based in grounded facts.
Absolutely.
Because the other place where we see people that have been disappointed with the infinite banking concept is that they came in with their imagination blazing on misinformation.
Yes.
I just read a quote today by John D. Rockefeller, and then I saw that maybe he wasn't the first one that said it.
Okay.
But he said, I don't want a nation of thinkers. I want a nation of workers. And to be successful at infinite banking, you have to be a thinker.
Yes.
You have to think through all the steps. And that's what we do here at McPhee Insurance, is we try to educate people so they can make the choice whether infinite banking is going to be for them or not.
One of the steps that I think it's important for people to think through is you're not just using this as an investment vehicle. This is also life insurance. So you have to look, what would have been the cost of term insurance if you were just doing an investment-related thing? You got to take that into account. And you got to take into account that this death benefit lasts your whole life, whereas term insurance is going to end at some point. Now, some people think they're not going to need a death benefit when they get to a certain point in their life. Maybe, maybe not. Some people do, some people don't, depending on the assets that they've been able to accumulate. Maybe you'll need less at that time. But whichever way you cut and slice it, whole life insurance has a place in your financial preparations for the future. And you've got to take into account that value and factor that into your total return if you're looking at it strictly from a rate of return perspective.
One of the most important skills you can develop is discernment, because as you saw, some of the information was good and true, and some was not. Being able to discern what's good and bad, right and wrong, will serve you in all areas of your life.
If you have questions about the infinite banking concept, you're more than welcome to ask those questions, and we can address them right here on Wealth Talks, or you can schedule a personal web meeting with me where I'll address those questions individually.
Thank you for joining us for this special episode of the Wealth Talks podcast, where we went through some questions we found on Reddit. There are a whole lot more where these came from, so if you found this interesting and valuable, let us know if you'd like to do it again. We'll be back next week right here on Wealth Talks.